today's a big day. We're reintroducing, after decades of absence, a 20-year bond. But it really does underscore the notion of debt. As of last Thursday, the Fed's balance sheet was approaching $7 trillion. I believe the exact amount was $6.93 trillion on their balance sheet. And we learned when we had the Treasury Secretary Mnuchin on with Jay Powell that the $500 billion of the original CARES Act, only about 8 to 9% of that has actually been spent, and we're already hearing for the need for more. As a man and a great economist who has written much about debt, even with the coronavirus issues, are we getting a little ahead of ourselves? Are we a little over the skis on debt?
Well, we're only 2 months into this, and it's probably going to get a lot worse. I think we have to support Americans. We have to support the economy. I don't know where this is going, but we're down 25 or 30%. We're hoping we're coming back now. I don't know how much. And this isn't quite the time to worry about that. I mean, there are costs, there are long run costs to having debt way higher than it was. But what we're going through right now, it doesn't really get a lot worse than this. So I think we should plunge ahead. But you know, it's not an excuse for bad policy. I mean, you want to have sensible policy restructuring the economy going forward.
No, and believe me, I am with you there. I don't want to sound as though I don't think we need to help these businesses. We virtually shut off the main circuit breaker. I understand that. But we haven't even spent some of the programs on the programs that have already been allocated to, I guess is my point. The focus has been more on getting more than actually using what's already been appropriated.
Well, it's very hard to turn up government this fast. I still remember back in 2008, people in the Obama administration saying when they did a 2% stimulus, the 1% was very easy to get going, but they had trouble getting the 2% going. But look, there's plenty of things to spend money on here, like giving money to state and local governments. But some of these more technical programs, you just can't do overnight. We wish we could.
Well, okay, let's look at the issues here as they appear. We want to make sure we do our best job. But instead of taking the worst case scenario approach, which many are, let's take a more optimistic approach like the equity markets, understanding the equity markets and the economy rhyme, but they're not necessarily the same. Should we end up doing better, and should medicine and science end up helping us sooner rather than later? You and I both know that the appropriated money most likely isn't going to not be used. It's going to be used. And I guess what I'm saying is, as rating agencies watch this global explosion of debt, how do you think they are going to be looking at some of these numbers at this point in time?
Well, I think the United States is in a unique position because the dollar rules the global financial system. A lot of other countries are going to run into trouble with the rating agencies pretty quickly, and not just the rating agencies, with markets. I mean, at the moment, the U.S. can borrow, and you mentioned at the outset 20 years. Yeah, borrow long, and that certainly reduces the rollover risk, reduces some of the risk. It's not a free lunch, but I don't think we're ready to stop serving lunch.
I understand. Now, when we look specifically at today's $20 billion of 20-year bonds, the yields look like they're going to be somewhere in the 120s. I guess my big issue is, ultimately, are we going to get enough bang for the buck with regard to this debt, of course, to continue to be able to find buyers around the globe as we end up competing not only with corporate issuance, but, of course, other global issuance? UK, for example, did a little over £3 billion worth of 3-year notes today, and it was at a very slight negative yield.
Yeah, well, that is a question going forward. That is a risk that we take. The dollar accounts for roughly half of all the debt in markets of advanced economies, of government debt, and we're expanding it faster than anyone else. And I think both history and models show it can get fragile when it gets up there. But I think it's a reasonable risk at the moment, looking at, the two sides of it. But yes, we want to have good policy, and running up debt shouldn't get in the way of good policy. But the fact we can borrow certainly shouldn't be an excuse for bad policy. And there's a limit to how fast things can get done in Washington. It's very political. But I don't really think debt is the issue so much as struggling over what's the way forward, how much restructuring is needed, how much are we making long-term shift towards dealing with inequality. I mean, I got to tell you, Rick, I think at the long run of at the end of this, taxes are going to go up for wealthier, higher income people, not right away, but that really is inevitable. That was probably true before this, and it's probably more true than ever.